G'day folks, welcome back to Pete's Investing. It's, March the 11th, 2024. This is the Bitcoin technical analysis. Now we're still in a bullish trend, although there is a bit of a retrace potentially starting, so just watch out for that. So first off on the Bitcoin price, we've got the weekly, daily and hourly charts here. And for those new to the channel, what we look here is the ADX25. It's bullish on the weekly and daily, and notice the hourly is starting to show us a fresh bearish ADX reading. On the CCI 150, we use this primarily as a trend indicator, but also as a divergence indicator. You can see that it's pretty strong bullish on the weekly. It's starting to turn down into this band of moving averages on the daily, and the hourly is already broken down and sort of fluctuating within that band. Now, I've got a trading idea I'll show at the end of the video, but basically when it hits this band or within the band, you don't take any long or short trades. You wait for it to break outside of the band like it did there. Take long trades. Don't trade when it's in the band, and start taking short trades when it breaks below, albeit small. Now, the reason I've got the different time frames, if we're trading on the 1 hour time frame, for example, you would trade only when the daily and the weekly align. So for example, back here on the weekly, it's broken to the upside. So you take long trades only based on the daily, weekly and hourly. So here you can see it's broken on the weekly, it's in the uptrend. And if I measured that, say from this point, you would have taken long trades from there up until that point. When it breaks below the band, you don't take any trades, long or short. Breaks below, but you still don't take short trades, because notice on the weekly trend is still up. And then when it breaks above again, you start taking long trades. That's to be conservative in terms of your approach to trading and improving your probability of success. And again, that's assuming you're trading on the 1 hour time frame. And again, I'll demonstrate that. But at the moment, you can actually be more conservative and apply it on the monthly as well. If you want to be really tight with your probability and approach, you can see on the monthly it's also above, so that's still safe as well. Now, on the next thing we'll look at, the next instrument we'll look at is Marathon Digital, MA. So again, on the weekly, it's broken up past its moving averages, but notice it's got a big bearish candle during that last week of trading. On the daily, it's actually broken below. So again, to be conservative, I wouldn't be taking any long or short trades at the moment until this sorts itself out. For this either to break to the downside on the weekly, or for the daily to then break to the upside again. We also look at, in amongst all this, just to add to the story of each of these, I've got this other indicator here. By the way, these indicators are attached in the description below should you wish to look at those videos. I've also got these bearish and bullish arrows indicating potential tops and bottoms. Now, they don't always pick the tops and bottoms. You can see there it picked that little bottom and it went up, and then a couple of tops there went down. So they apply as well, and they're not like zigzags. They actually fixed once they're red. They're actually fixed. There was a couple of bottoms indicated there, and so on, and tops up there on the hourly. So they can be quite useful to help identify potential downturn. But also we do look at, I mentioned this is the CCI 150 is the divergence indicator, and you can see there between those highs, higher highs on the price and lower highs on the CCI, that indicates a bearish divergence, and the price actually fell down. So I like using these arrows, these bearish arrows, for example, to indicate a potential turn as well as the bearish divergence in that case. Now, there's no bullish divergence on MARA. Let me go back to Bitcoin for a moment. And eventually, when the chart builds, there you go. I'm just trying to show you any other divergence. There was no other divergence back here. On the weekly, notice there was a double top up here, if you notice that, versus the CCI, and it fell off quite strongly, and that would have been wise to take those short trades when you saw that starting breaking to the downside. There was a bearish divergence back here, and that also fell off and sharply as well during that period. Now I've got a few red arrows up there, but there's no divergence yet on the 1 hour chart. So next we'll look at BITI, ProShares Short Bitcoin. There's no CCI on the weekly for this one. On the daily, we do have a bullish divergence actually. So if you draw it from the same period, you'll see there that's actually gone down to that point. So if we draw it from there to there, and I would extend that trend line down to that new low. That's where it was previously when we did our last video, and it's actually dropped further. So as long as the CCI at the current point remains higher than the entry point in alignment with the price, that's still a bullish divergence. So we expect it to bounce at some point. Now this price could still keep falling, so long as this CCI is still above, so that could, in other words, that could keep dropping down to about there. So long as it remains above that point, we're going to consider it a bullish divergence. That's on the daily. On the hourly, we've also got a bullish divergence. They don't always line up between the different time frames. So you can see there, and that would have been from that point down to there at the moment. So you can see there's a bullish divergence on the hourly as well. But also just be mindful, again, we want to trade. There's no weekly indicator here for the CCI, for the trend. So this will be a tricky one to trade, but we can still do it based on divergence and support resistance lines. Lastly, we're going to look at Riot blockchain, RIOT. Again, looking at this one, that's also starting to break down towards the moving average band on the weekly. So be careful about going long, even though ADX is showing bullish movement. On the daily, it's already broken below onto a short positioning. So if this breaks below that band on the weekly, then we can start taking short trades so long as the weekly and the daily are aligned. In terms of divergence, there was a bearish divergence there. You can see that between those points which align with the price, higher highs on the price and lower highs on the CCI, and eventually it fell off. And that would have been, again, wise to take that. Now, in terms of target areas, we look at typically between that Fibonacci range. Let me just blow that up. And we typically take the closest Fibonacci range as a target area. Now, that would have been between that 23 and a 38% level. I like picking the midpoint. That's why I've chosen a 31, although it's not strictly a Fibonacci, but that's the midpoint between the 23 and the 38. Of course, in this case, it actually came down as far as the 50% before it recovered, so that would have been the end of that divergence. At the moment, we've got no other divergence. It's still that CCI is trending in line with the price, which is what it normally does anyway. So now we'll talk about looking at a trading strategy when we look at the weekly, daily, and hourly timeframes when they're aligned. So here we'll go back to Bitcoin as an example. So again, here we're looking at the weeklies in a bullish mode. The daily is just touching that band, so you would stop taking long trades and not take any short trades either until we see both the weekly and a daily break to the downside of those bands. So what I've got here is basically the daily chart, which I've already demonstrated, and that CCI is touching the bands, those moving average bands. And on the right, I've got a green chart and a pink chart, and this one's the average down approach, this one's the stop loss approach. So basically, you would stop taking long trades today because that CCI is broken into that band, so you would stop taking long trades, and up here I'm demonstrating a back test for the long trades. So you can see there, when I place the cursor there, you can see that's where the back test would have started. You would have started taking long trades from that point on the hourly chart. So this is the average down approach. You can see there it averaged down 3 positions. This is a stop loss approach. Overall, the average down approach has generated $6,380 or $6,380. The stop loss approach has generated $1,753. But also notice, this is the price chart and this is the CCI 150. Notice there's the divergence, the bearish divergence versus the price. Now that could have been already happened, that sharp decline which I demonstrated earlier. So, but had you let this program run, this strategy run throughout the whole period, that's what it would have generated. What I'm suggesting is you would have, in this case based on the daily, you would have been careful about going long, considering there's a bearish divergence here. If that CCI was rising in the same alignment with the price, you just let it go until the daily starts breaking to the downside, or the hourly, if you want to be really cautious, when the hourly breaks to the downside as well. So in other words, you may not have taken this trade if you saw this bearish divergence. So stay tuned to the very end of the video. This is the first slide. I've got 2 slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.